Head of equities tactical strategies, saying that his main concern today is that Trump's announcement will leave room for interpretation. Trade policy will continue to be in flux. I know it's not your base case, but if that's the situation, that we end up with more questions than answers, what do you think that will do to sentiment?
You know, Katie, we think that continues to weigh on the sentiment. What that means is a lot of choppiness for the equity markets, right? The equity markets, S&P is down about 8% before today, as of end of yesterday, right? And if you go back to the Trump 1.0, the equity market S&P 500 was actually down 20%, and it took over 3 months for that to happen. This time, it's a lot more broad-based, both in scope and magnitude. And this time, there's a lot more what we expect an aggressive retaliation response from our trading partners. So we would expect this to continue on for at least several months and, continue to weigh on sentiment, both the consumer and the corporate sentiment.
Speaking of sentiment, I just want to pull up how sectors are performing today, Nimrit, because you don't see investors just pressing the hold button. You see people selling. And almost every sector to start the morning is in the red on the day, minus consumer staples, which is barely in the green. Of course, that is quite a defensive trade. Why do you think all the sour sentiment is still out there when the news we have so far about the direction of tariffs is still so sparse?
Shonali, one of the big things is, the market moves well ahead of estimates. We started the year off with a S&P growth for about 13%. We're now at 9.5%. But basically, the broad-based nature of the tariffs that we're expecting, it's going to hit every sector, really, other than maybe some of the very domestically focused companies. So that's what's affecting the sentiment. That's what the market is trying to get ahead of here, because, with S&P 500, almost 40% of the revenues coming from international and 40% of our cost of goods coming from outside of the US, it is a material exposure. And this time, to layer on just the tariff impact is the retaliation impact. I mean, you were covering Tesla just before that. You only have to look at Tesla and the year-to-date performance to know what happens when, the consumer sours on the brand. And so, do global consumers of U.S. Products sour on the U.S. brand? That's what's weighing on. And that's why we see this just, get me out of the market, get me out of all these stocks. And of course, investors are sitting on a lot of gains that we have realized over the last 2 years.
I just want to point out that New York Mayor Eric Adams has had his criminal case permanently dismissed. So it looks like his trip to Mar-a-Lago paid off. He got his wish from President Trump. Can you look at, the winners in this market, Nimrit, or can you narrow down a group of companies that won't be affected by big tariffs and, put your money on them? For example, U.S. steelmakers seem to be quite happy about this whole situation.
You can definitely do that, but we think those are more trades, tactical trades, short-term trades. We would say that now might be the time to take that longer-term perspective. We're seeing a lot of dislocation in the equity markets. There are a lot of valuations are getting a reset. So this might be the opportunity to have some of that long-term thinking. If I take a step back and I say over a 5-year viewpoint, where do we see actually underlying growth drivers? The U.S. civil engineers just put out a report, which they put out every 4 years, showing how first of all, they gave the U.S. infrastructure a C grade. Secondly, there's so much need for investment in our water and public infrastructure back here in the U.S. And if remanufacturing, getting the reshoring back here, manufacturing in the U.S. is a real thing, we're going to need to invest in our infrastructure. So with that viewpoint, why not take this time to do the work, look at some of the companies that are going to benefit longer term from that infrastructure spending back here in the U.S. and take some starting positions there.
Nimrit, great to have you this morning, of course, ahead of that tariff announcement, highly anticipated. That is Northstar Chief Investment Officer Nimrit Kang. Now let's get a look at some other stocks on the move with our own Bloomberg's Nora Melinda.
Shanali, I've got a few names here for you in the red this morning. I'm taking a look at telehealth company Hims and Hers. We're seeing shares lower after a 5% climb yesterday. And this is after the company announced that it'll actually be selling Zepbound, which is Eli Lilly's drug for weight loss. And this is really marking a departure from the company's focus on cheaper and compound drugs. But we are seeing shares lower as analysts and investors really digest the fact that Eli Lilly has reiterated the fact that they are not associated with Hims and Hers in this decision making. But much to keep an eye on here. Also keeping an eye in the banking space. Looking at shares of Truist, they're down just a touch this morning. And that's after Raymond James cut the stock to market perform from outperform. They're doing this ahead of earnings. We know bank earnings are on the way really swiftly. They're saying that they expect reduced financial guidance and EPS revisions from the company. But this is really just this idea that bank stock valuations are showing that investors are really